Fundamentals means investors buy stocks based on the company's financial performance and various financial ratios that tell you how good or bad the company is from an investment point of view. They also make decisions on how its market share is growing or declining, whether the business will see continuous long term increase in demand or keep reducing in demand. This is called the sunrise industry or the sunset industry. Let us say, because of the green planet, the future may be all electric cars. Who knows? So any company that is making parts that goes into the making of electrical cars like batteries, charging stations or other parts will become the sunrise industry. The ones that make car engines that require petrol and diesel, which will keep reducing in demand, became a sunset industry. This is a fundamental view about the sector. Fundamentals also take into account the quality of its management, how honest they are, and their rate of growth between 5 to 10 years in the past or towards the future, and so on. Technicals. This is a very fascinating and unbelievable topic. It basically believes everything in nature has a pattern. The waves of the sea, the petals of flowers, and therefore, even in stock markets, there is a pattern in which stocks move, both higher and lower. I was fascinated to see that it is actually true. I couldn't believe it until a trader actually demonstrated it to me and showed me the correlation. I will share a simple demo on various such technical patterns at the end of this program. You can pause here and read the theory if you want to know the definition. There are three main types of technical analysis charts: the candlestick charts, the bar charts, and the line charts. They are all created using the same price data, but they display the data in different ways to make different decisions. Then there are some hundreds of technical tools that help you make decisions on buy or sell. The five major ones are as follows: 1. Moving averages. 2. RSI indicators. 3. MACD. 4. Fibonacci retracement. 5. The Elliott wave theory. I will not take you into these details, but at the end of this recording, I will show you a demo of what all these mean and how it forms a pattern for making buy or sell decisions for stocks. If this fascinates you, you can join many programs that are available online to learn technical charts. The global scenario. Everything that happens in the world has a relationship with the stock market. Pandemic, wars, floods, earthquakes, change in government, oil prices. Everything is related to the share price and the stock markets. We call them events. It is important to track major events for you to make the right decisions at the right time. For example, if there is a drought in Brazil, by the way, Brazil is the largest coffee producing country in the world. What will happen? The supply of coffee beans in the world market will reduce. Coffee prices will shoot up. So, as an investor, you will see the following: Starbucks, whose main raw material is coffee, is now becoming expensive. This will hurt their profits for at least 2 to 3 years. People may start selling Starbucks shares because they fear that the company's profit will reduce. Therefore, the share price will fall and keep falling for 2 years. Similarly, there is another company called Tata Coffee that also has coffee plantations, but in India and not in Brazil. Because the supply has reduced in the market, they will now get a higher price for their coffee. So now Tata Coffee will make higher profits for 2 to 3 years, and many people may sell Starbucks shares and rush to buy Tata Coffee shares. This was to say, if there was a war in Iran, it affects oil supply as Iran is a major oil producer. So oil prices will move up. Crude oil is used in making plastics, paints, tires, and many more. All such company shares will fall because their costs go up and their profit margins will reduce. This is why we need to be aware of the global scenarios and its effect on stock prices. Long term investors never need to worry about this because eventually all these highs and lows average out and you make huge profits. But as a stock market investor, you need to know how the stock market thinks and behaves on various global events. This, my friends, is a perspective on how people make investment decisions. I hope you found it as interesting and as fascinating as me.